Hello, today I'm here with Vanish Patel, and Vanish is one of the UK's most accomplished landlords, and I'm really pleased to be having a discussion about tax and regulation. So, Vanish,
Thank
your
you.
favourite subject, tax and regulation.
I know. I was thinking, but unfortunately we have to talk about tax, and we're going to have to talk about interest rates because I think one of the things that a lot of property investors don't really think about is we're in the business of making money, okay? And you may find a great deal, but if you don't structure the deal in the right way, you could end up paying more tax than you need. Okay, and investors have had a good success run in property so far, but we do have to be mindful that all these recent changes in interest rates have been coming on a downward end, and I think unfortunately there is evidence to say that gravy train is coming to a halt. And one of the things I always try to encourage people is to remember this, that the long-term cost of capital is something you really have to get your head around. And I see a lot of people who are making deals stack based on today's condition. So it would be like trying to build a business based on the weather. Like we've got this wonderful weather today, right? And if you made that assumption that that is what the weather is going to be like over all seasons, right? You would then not build a substantial business that could handle the tougher times coming forward. So I think a lot of people are calculating interest rates and assuming that they're going to continue to either go down or stay low, right? And with a lot of the changes that are coming in the market, I think there is a need for a back to sort of sensibility, and people understanding that one of the challenges people are going to have is you may be able to make a deal stack today. The question that I really think that people should be thinking is, what have you made in your assumptions about what the interest rate and the lending environment is going to be like 5 to 7 years from now? Because you will find that your deal will have to be more solid in 5 years' time, because the interest rate calculations that the banks are going to be using later on are going to be more challenging. So what I wanted to do was really just share some thoughts and ideas. Same thing with tax structure. Okay, years ago, 10, 15 years ago, when we were sort of helping people get started in property, we used to have this general thing: just go out, buy whatever, buy it in your own name. You had to worry about tax after your fifth deal. And now I feel that I have to kind of unwind that statement. I say, before you do your first deal, you really do need to think about the corporate structure and all the things that you're going to need to get to, because it's very difficult once you've gone down one path to suddenly go, oh, let's change the legal entity of which the property that you're doing in. So a lot of people are not sure about which ways they should do it, and so I think taking time out to learn about that. So two things to remember is this: number one, finance is going to be your single biggest variable, right? And that's going to determine your success and failure. Second is tax. So you need to be smarter than the average person on those two. So I just think that those are things that people just need to be wary of.
Do you predict the taxation changes that we've got that are being phased in at the moment, like happened in Southern Ireland? Do you predict that there might be an unwinding of that? No.
Let's keep it simple. No.
No. That's a definite answer. I like definite.
I think there's too much overwhelming evidence, right, that it's not going to get reversed. What is going to happen is, more importantly, that it's not so much that the taxation is the big issue. It's more that personal ownership and investing, right, is not the most tax efficient, and the government have just made it even more untax efficient. The flip side is that you have a situation now where corporate ownership of property, right, there's light and day. So you have the scenario where company rate tax. Okay. Do you know what it was 10 years ago?
I can remember it used to well, large companies used to be 30%.
Correct, right? So it's gone from 30% to where we are now, which is around 20.
Yeah.
Okay, and I think in the next 5 to 7 years we're going to end up at 15%. So what you have to remember is we're going to have this duality of you can make a shed load of money, pay 15% corporation tax, or you can have a property, the same property with the same rental in your own personal name, and you could end up, depending on what other source of income, you could be paying 45%. Right?
Yeah.
So it's more that the government and the powers be are shifting ownership into professional entities, and that's the way that they're incentivizing. So I just think all that property investors need to think about is not, the general thing is, oh, can we go back to the good old times? And it's just like, they're there, but you just got to move the entity over and understand you're going to have to set up a company, you're going to need to know all those issues, and you're going to need to know how to get the money out of a company. But by the same token, the benefits of owning things in your own personal name, they're diminishing.
Yeah.
And unfortunately, we're ending up in this scenario where the middle class, if you own everything in your own name, incomes, you have very little benefit and wiggle room to move around and take advantage of. Whereas if you have a company, you just have so much more.
With companies, do you find that there is benefit with regards to legacy and passing the company on with less business interruption than if it was in a sole trader?
Yes. So one of the big things that people need to look at is the silver lining. So when you own a property in your own name, it's really difficult to sell 5% of that. Mm-hmm. Right? But you can in a company, right? Yeah. So you can own a company and you can sell gift, right? There are many already well-established IHT benefits, legacy benefits, and also just working with other people, right? So some of the things that I think people need to be aware of is you need to think, okay, what is it? What's the deal?
Yeah.
But understand that that's about 50% of the puzzle. The other 50% is how am I going to structure it, okay, so that I can get the most efficient capital and pay the least amount of tax and deal with how long I want to keep it for. So we're just moving in that arena, and it just means that beginner investors or people that are just sort of relatively, you really do need to think about the next 10 years and the way the market's moving. So one of the things I always try to tell investors is don't look at where the market conditions are today. Look over the next 5 and 10 years. Absolutely. Make your best guess, right? Because guaranteed by the time we get there, the government will have made a few changes, there will be some regulation that will come in, and market forces will have changed. But you need to be thinking that, seasons change. Right? Yeah. So I always try to think, when I'm looking at a property, I'm not just thinking, how do I buy this? But I'm thinking, okay, how do I manage, own and dispose of this 5, 10, 15, 20 years from now? Yeah. And we've got to make our best guess. So that's why I always encourage, come to events that you organise, meet other like-minded investors and see what they're thinking. Most people, I feel, are too quick in the instant gratification type thing. So you need to make sure that you find a good deal, but make sure also you don't paint yourself in the corner 5 or 6 years from now.
Absolutely.
Right? So I always try to just share little things, tips that people can learn from in that way.
Well, I look forward to hearing lots more hints and tips from you over the coming months and years, Vanish. You're always a brilliant person to listen to. You inspire me a lot. You give me a lot of direction, and you also ground everybody with your advice. We were talking earlier to somebody about how to market something, and you're always spot on. I love your attention to detail and your brilliance, the way you can just help in every situation.
Exactly. I think one of the things I try to just help people is that there's a lot of things that there's to learn, and you want to take the time to think through things. So I spend probably a disproportionate, the presentation that I'm putting on together with you today. I know I spend far more time than most other people do, but I think that once you pay attention to detail, the little things, it's repetition of those. Yeah. But thank you for inviting me. I know you have a great event, and everybody that I've heard about your event has always said good things. So I'm glad that
Thank you.
thanks for inviting me, and we'll see how things work out in the future. But for your listeners and everything, the market conditions are still relatively good.
Yeah.
But we need to understand that it's not. Winter will be upon us at some point. So be prepared.
Absolutely.
That's it. Just assume that things are going to get a little bit tougher, but they're still worth it hanging around the property.
Definitely. Well, thank you very much, Vanish. That has been a brilliant insight into tax and interest rates and the market going forward. I'd like to say thank you very much, and I'm Andrew Roberts from Property Investor Reward Club with Vanish Patel, one of the UK's leading experts in buy-to-let property investment advice. Thank you.